What's up, guys? It's your boy Freddy here. So remember, this weekend is a 3-day weekend, which means that there will be no trading on Monday. So hope you guys are well aware of that. And I decided to make a video today because I want to talk about the upcoming market correction and or a recession that is looming on the horizon. Now, before I begin, I want to talk about my Discord. It is stockrabbit.vip. Go ahead and check that out. It is one of the fastest growing Discord um online out there. I do stock trade signals, I do long-term, short-term analysis, I do daily updates for individual stocks like Nvidia, Tesla, Coinbase, Google, you name it. So go ahead and check that out. Now, I want to briefly talk about the S&P 500 ever since the year 2025 started. Now, you can see that we started at 584 on February 1st, February 2nd, and we are currently sitting at 609. So for the year up to date, we are actually positive in the market. So the market actually is higher since the beginning of the year, and that is following, remember, one of the two back-to-back strongest years for the S&P 500. 2023, we had a 20% gain. 2024, we had over a 20% gain. And a lot of analysts and pundits out there are saying that 2025 is less likely to have another double-digit gain because we just had the best back-to-back years. And remember that ever since January 1st, we haven't had any correction yet. So I believe that once we get the final top or whatever the topping process looks like here, we're going to enter into some sort of correction. And if it's even worse, I believe it could be a recession. Now, why do I say there could be recessions? Because everyone's paying attention to this, right? The 10-year versus the 3-month yield curve. Now, you can see that every time we got the uninversion of this yield curve, which means that it is above this 0% line, we get the recession right here in the 1990s, again here in the early 2000s, again 2007, 2008. You can see that it's well above the zero line, right? You can see that we got another one in 2020, and we're about to get another one in 2025. Now, you can see that every single time we got these recessions, the yield curve is well above the 0% line, well above the 0% line before the recession starts showing up. I believe the same thing is happening here, and it could signal that it's right around the corner. But what could set off the recession is still up for debate. So the data is already showing, though, that the U.S. economy and the consumers are already in a recession. You can see that the credit card debt hits a record 1.21 trillion. People are borrowing, right, at record levels. And that's because, there's financial strain among these people, and they're just adding more and more on top of their credit cards. And you can see that it's skyrocketed since 2021, right? Pandemic hits, the lowest level was in 2021, but now it's skyrocketing. And keep in mind that this is even on top of the extra high interest rates that are currently in the economy right now. You can see the Fed funds rate sitting at 4.33%, while at 2021 it was sitting at 0%. So, and interestingly enough, at 0%, people borrowed less, as you can see. But now interest rates are sitting at sky high levels at 4.33%, which is the Fed funds rate, and people are borrowing like crazy. That tells you, something's off. Consumers have been in a recession for years now, right? They're just struggling to pay their debt, and the government is really just ignoring all of this. You can see that the CPI actually ticked higher. And there could be some volatility with the CPI, which is the measure of inflation. But this ticking higher could give the Fed worries about, possibly making another rate hike in 2025. So if this ticks higher due to, Trump tariffs or, another inflation scare, the Fed can actually get a lot worried and start to hike rates. So this is another risk for the overall markets. But if the Fed hikes rates, we're going to be in a high interest rate environment for far longer. But the problem is these consumers are already maxed out, right? So something's about to break. And you can see that the wait and see Fed is going to be waiting longer than anticipated after a red hot January CPI report. This report puts the final nail in the coffin for the rate cut cycle, which we believe is over. Indeed, market pricing shifted the outlook for the next rate cut to at least September, right? And it says we don't get excited about one or two good readings, and we don't get excited about one or two bad readings, Powell said in a testimony. So they're in, so markets actually shrugged off these high hot CPI inflation report because as Tom Lee mentioned, right? I believe last year he said that if the market knows that there's going to be fewer rate cuts, it'll actually help extend the bull cycle, right? If the Fed panic cuts, then we know we're already in a recession, right? When the Fed just panic cuts, it's just way too late. So because the next rate cut is shifted all the way back until September, the market is interpreting that as bullish. That's why the market shrugged off a red hot inflation report, and that's why we are moving much higher, right? Now, this is the interesting thing. So the US job growth, right, came out February 7th. The US job growth through March revised down by almost more than 500,000 jobs. And this is a big problem because if you know that throughout like all these job reports, right, every single month, it's always jobs are there's more jobs being created. And this is actually helping the theory that people are saying that there's a stronger economy, strong jobs. And but that's actually false. 1 year later, we actually find that it's actually revised down by 600,000 jobs. So they've been overestimating the amount of job growth through March by over 600,000. That's crazy, right? That means they've been fluffing all the numbers, and I believe that this is actually politically motivated because the BLS, right? Like it or not, all these government agencies are politically motivated. And a lot of people are helping like these agencies are helping Biden get reelected in this cycle. So they're fluffing the job numbers. They're making people think that, jobs are actually doing great, right? Even though we have a struggling consumer, which doesn't really make sense. And now we're getting the real numbers. The real numbers are coming out saying that, you know, they're revising down by 600,000. They're overestimating by 600,000. Absolutely crazy. And the recent jobs report, which came out February 7th, says that U.S. economy just added 143,000 jobs in January, but unemployment rate fell to 4%. So the non-farm payrolls in January rose by 143,000, only 143,000, down from 300,000 in December. Right, look at that. So now they're looking at the real report is starting to come out, but the problem is the unemployment rate nudged to 4%. I believe that the unemployment rate is actually set to explode higher, right, as we move into 2025. And the reason is because of Elon Musk's Doge Department of Government Efficiency slashing hundreds of thousands of government jobs. And you can see that the Doge is starting to take effect. It rips through education department, cutting contract staffs and grants. This is going to contribute to much higher unemployment, right? In the near future. So no longer are they going to rig these jobs reports. I believe that the real jobs reports are going to start to come out since Trump is now in office. And Trump had a tariff delay, so he talked about delaying tariffs, and that eased panic in markets. That's why we're seeing for the S&P 500 much higher levels. So markets are breathing a sigh of relief, but I believe that he's delaying it till April. So, there is still a period of risk where he could start to implement these tariffs again. I believe that all these factors, right? These tariffs causing higher inflation and causing strain in consumers, all these factors are going to soon play a part in creating the correction and the recession in markets that I'm anticipating in the next few months. So hopefully that helps you guys out. I believe that now is the time to, after we get these all-time highs, we can start accumulating cash and preparing for that correction. And let me know what you guys think, right? Do you guys see a recession on the horizon? Are you guys going to prepare for an upcoming recession? Or do you guys see, 7,000 S&P 500 all-time highs? Let me know down in the comment section below. If you like this video, give it a thumbs up, give me a follow. Go ahead and check out my Discord, and I will see you guys in the next video. Peace.